started in my intro, it's a very exciting space. It is a space in a broader fintech. We have seen highest amount of investment happening within this year. It's not a one country phenomena. Starting at the region itself, all the new licenses that come out in Singapore are also exciting between Grab, Sea. Uh, Looking at the models which have happened in US between someone like a Chime, Stash, UK, Monzo, Starling, Revolut. We just started talking about Tandem a little while back. Hong Kong has given a lot of new licenses. We have seen Latin America throw up some very interesting models. A common pattern amongst all this phenomena, or do we would have regional variations of all the models emerging? There is really a core question of how will they do the customer acquiring differently than what has been done so far, which is going to be the key factor of their success. And finally, how will they really solve for viability? So those are very important questions that we want to delve deeper into. And it's my pleasure to chat with both Jiten and Smita today. Probably just hand it over to both of them for some opening remarks and their own introductions about what they do overall, what is their excitement in this space, and what they're looking forward to. Smita, if I start with you first, what excites you? What are your opening remarks in this area?
Thank you, Vivek. It is indeed a phenomena that we see catching up across the globe. In fact, I was just reading the CB Insights report, and in the first 9 months of 2020, more than 100 neobank fundraisers have happened. And it's likely that the 2020 total for neobank fundraisers is going to be higher than 2019. So there is this is definitely a trend which is accelerated because of the overall digital adoption increasing everywhere. You had asked about, what is common and what is not common in all of this that we are seeing across US, UK, Latin America, and closer home in Asia. I think what is common is the fact that consumers over the last decade have experienced technology and superior UI UX through commerce, through gaming, through entertainment. And it's now time for financial services to be experienced in a similar way, which are seamless, which are, much more consumer centric, and which actually offer a completely new way an experience to the customer. So I think that one thing as the driver for this is common across the globe. The second thing that is common is that banking need not necessarily be offered, in bank-owned channels by licensed universal banks. I think it's more and more evident that banking and financial services are going to be embedded where the customers are and where the need is, rather than expect the customers to come to the bank. It's the bank and the financial service providers that need to go to the customers wherever they are. And in the virtual scenario, it means being present as part of a gaming platform, being present and embedded in an e-commerce site, or being present when you're taking a cab ride. I think that is a common phenomena of, services being available wherever the customers are. Of course, there's a lot of differences that we see region to region, and we should delve a little bit more on those. All I would like to say is that in the last 6-7 months of the pandemic, we've seen banks in the US, neobanks in the US like Chime and Varo, who've seen an unprecedented rise in their customer signups and transaction volume. On the other hand, we've had UK focused banks like Revolut and Monzo who had to do a lot of layoffs. And then, of course, closer home, we have in Asia, we are seeing new licenses being offered, which is a full license to a digital-only bank. So there are clearly very distinct business models and motivations that vary from country to country. And it's important that we unpack those before we, understand what this whole phenomena is.
Lovely. I think both great points. One is focus on experience. And second, I couldn't help but notice that when we look at a Singapore model, to your idea of embedded finance. They really have given licenses to folks who are running those data platforms who can now embed financial services. And when we contrast it with what we saw in India and few other countries, it's been the traditional players who really went into the new licenses, right? So quite an interesting contrast. Jitin, you've been a serial entrepreneur, investor, participants, ecosystem driver. What has been your views and what's your excitement to really found your next startup and bang in middle of this space?
Sure. So I think first of all, just to give a quick intro. So my background has been in payments, banking, and lending, consumer lending side, and this is my kind of a third stint, which I'm sort of on to after payments and lending in last 10 years, I would say. And I think what Smita just mentioned from a what's common standpoint is very, very apt and relevant. That we have seen things improving in the commerce side, in the OTT space, and overall the internet ecosystem. But the financial services sort of have stayed in terms of the consumer experience, in terms of how the consumers are being served over different channels. I think more or less similar in last 10 years. I think while India has done a good job in terms of improving the rails of payments, the rails of transfers and all of that. But the experience of consumers on banking side primarily has remained same. And I think that's where I thought that it's time where somebody got to take a shot at it, work on a plan which could provide a banking experience which is more suited to the segment of the customer rather than one size fit all approach, more suited to the new age smartphone based banking. And smartphone inherently has so many, I would say, the features, functionalities that your experience could be more personalized. Your experience could be literally the way you would want to consume, rather than what we have seen in branches where this is it, take it or leave it. So I think that's the whole space, which is sort of, I'm like, there's ample opportunity. Existing banks, while they're shaping up, but still far from ideal, and market size is so big. So I'm like, it completely makes sense to dwell into it and make a space for us.
Fantastic. That does cover also the query which I had, which is how can it really change the shape of financial services? And if you can really drive that adoption and usage, which is where I think at the fringes is where we see the opportunity as well as challenge. That does cover it. And Smita, just pivoting to you, if I take that trend, how would you nuance that between few geographies that you have studied? Would the Asian countries have a slightly different problem than, let's say, America and the UK? How do you see the global trend versus the local trends?
Sure. So let me start with in the US, one of the big reasons for the success of the neobanks has actually been around, the motivation has been around offering more transparency to the consumers around hidden charges and, overdraft fees, and making things more accessible and more economical for use and more transparency. I think that has been the biggest driver. And I think their revenue model has been entirely supported through the debit card interchange fee, which still continues to be very high in the US. And that itself is enough to support the entire business model. And therefore, they are able to offer no fee structure or no cost solutions to the consumers relative to the incumbent banks, who end up actually charging for every little thing they do. More importantly, not even sharing how much they are charging for what. So a country like US, which is not unbanked, which is actually quite well banked, but there is this huge trust deficit between the customers and the banks around the services, around the fees, around the service quality. So that's the need gap that the neobanks in the US have been able to fulfill. On the other hand, we've seen people like Revolut and Monzo in the UK targeting the millennials, the younger population, the young adults who want new features, around payments, around splitting bills, around, travel, foreign exchange embedded with travel. And those are the kind of features that the new emerging affluent young people would like to see. And that's been the initial pitch that these banks in the UK have followed. I think the issue in Asia more broadly, both in India, Southeast Asia, is actually quite different. Here, the challenge that we are really dealing with is underbanked. Even though in India, we are saying there is 80% banking penetration, but really in terms of usage, if you see, it's much lower. And more importantly, what's the quality of service that an SME would get, or what's the quality of service that a low-income customer would get? So I think similarly in most of Southeast Asia, there's only less than 50% banking penetration. So in Asia, it's really around giving a first-time banking experience to a very large set of population. So it's really around tapping that unbanked, underbanked segment with something that is relevant to them, not something which is available and here we have a product, just take it. So I think that is the big difference between what we are seeing emerging as an opportunity in Asia compared to the developed markets.
Lovely. I think the first segment we really want to focus on why this exists. And just to cap it up, Jiten, how do you see COVID's impact? Do you think it will be a tailwind or a headwind in this journey?
I think it's a good question because when I speak to bankers nowadays, certainly the bankers have realized that the COVID has changed the way they do their business. And I see most of the banks forming digital teams or bringing in the non-banking chief digital officers in their banks. So which clearly shows that this seems to be on the tailwind side, and a lot of focus is coming in because now the banks have no choice but to sort of improve the process on the digital account opening, servicing the customer digitally. No more calling to the branch for petty things. So clearly, and from a consumer standpoint also, like if you look at the traffic at branches, that has gone down by almost 80%. So consumers don't want to step out unless it is like an absolute must-have or must-go. So I think in my view, it is more of like what happened the cash to digital in India in 2016. Due to demonetization, it is a similar moment for India for the digital banking as a domain.
Fantastic. And Smita touched upon a little bit on what are the kind of differences we are seeing globally versus in the Asian markets, and probably the main line of difference is bank versus unbanked. There are some commonalities in terms of transparency, in terms of customer experience. But again, many of these markets have very diverse groups who are, let's say, unbanked, right? So, gig economy or the blue collar workers could be unbanked. A lot of SMEs, micro SMEs, MSMEs could be unbanked. There are a lot of sectors like agri, utility, supply chain, which have had traditional challenges. So, how do you look at this? How can we talk through to our audience on to understand this landscape of use cases and business models? Would really invite views from both of you, probably Smita, starting with you to double click on the models you spoke about. How do you nuance that out, and where do you think are possibilities for us to consider?
Right. So if you think of the business model, I think there are really three parts to the business model. The first part would really be around your customer acquisition strategy. What's your go-to market? What's your hook proposition that will drive customers to come to you rather than the other way around? So I think, can you make yourself to be a pull product versus a push product? Can you have a hook use case that will drive usage and bring your customer acquisition cost to be very low. The second piece is really, now that you've acquired the customers, how can you keep the engagement level high? How can you maximize the share of wallet with that customer? What's the breadth of offerings that you can offer so that you can maximize engagement, as well as you can, the customer can benefit from, the services and the products that you're offering. So that's the second piece, the engagement model, and how are you continuously increasing the uptake. And the third piece really is the entire revenue model and the monetization model, so that your business can be sustainable. There's no way you can be sustainable if you do not have a revenue model and a clear path to profitability. It need not be from day one, but that has to be something. So I think these are the three core elements of a business model. I think the overarching message that we see as a post-pandemic thing is that if you have something relevant to offer, people will use it. The trialability and the willingness to try something new and digital is very high. But you have to offer them something new and something relevant. You should not go on the basis that they will change their behavior to use your product. It should be the other way around. How can I design something that is suited to their context and that solves a real problem that they might be facing? And I think the second big message is that the business models of today and the future, which will sustain, are going to be those that are going to be win-win models, which means you have to make money with your customer, not make money off your customer. There has to be a clear benefit that the customer gets as well. And of course, you should take a share of that benefit, but you cannot be making money off your customers.
I can already see Jiten loved that statement. What would your view, Jiten, on that?
Yeah, it is so true. Actually, that was my starting statement, that in the business model of today, especially financial services, you cannot operate in a world where you are making the money and customer is not getting any benefit. So I think it is very, very imperative to sustain, because that is effectively the neobanks are saying, right? Which is that we provide a better experience as well as the cost benefits. And since we are pure digital, we have the ability to pass the lower cost benefits to the consumers. And I think that if that philosophy is not being maintained, the consumers or any customer segments will find it very, very difficult to see a real value, because cost is the number one thing which anybody sees as the tangible benefit. And then comes the whole experience part. And I think the experience, if it is not relevant to them and it is more about a good looking UI, I doubt that is going to make any sense to the customer segment. So whenever someone asks me, what is that the customer experience is solving for? Just the UI, right? And I'm like, the customer experience is not about UI. It is about whatever the backend process you sort of enable, whatever the resolution process, the customer service, how it has to be more instant, how it has to be on lines with what Amazon or Swiggy or Zomato provide, right? They give you benefit of doubt when they know that you are saying truth, and based on your history, you're not just duping the other party. So I think, well, today the bank's processes are being designed in a manner where, okay, you have a dispute, fill this form, we'll take 21 days to investigate, then we'll take 45 days to give you credit. So I think the whole archaicness in process is what customers are not happy with. And customers are like, on one side, I deal with my new age internet brands, and on the other side, I deal with my bank who just don't understand who I am. And I think that is the whole gap I see. I think from a business model standpoint, fortunately, Vivek, I see that customers don't mind you making money when you offer products to them. And I don't think so. Customers are expecting free products, because if you give credit, of course they expect you to make money. They expect you to sort of charge them interest rate. Or if you are helping them in payments is okay. Well, the UPI has become sort of free, but the interchange kind of benefits and all of that still stay. And today, fortunately, in the subscription economy, I think customers actually don't mind paying small amount of subscriptions also for the added benefits. So I think that's these are the changes which I'm seeing in the customer's mindset, and if they find that the offering is relevant and benefits them, they're ready to pay more than what were paying today per se. So from business model standpoint, I don't see much of a challenge. I think it is the most important challenge is how to stay relevant and how to have that constant engagement being maintained with the customer.
Fair points. Let me bring a different dimension in the business model, which is there's also choice for neobanks, as with many fintechs, as to how much of regulatory business do they have to get into, and how much can they really play like a platform and really partner with the manufacturers. Based on both your experiences, what are your views on it? And if you can bring it to life with some examples on what might work, what are the pros and cons of each model, and obviously there would be something which will suit one better. And Jiten, you yourself in your business would have gone towards one model. So what are the pros and cons one should think about?
Sure. So let me take a shot. So I think it is also the stage of the company at which you take such calls. And I think just before this call, I was asking Smita in terms of her experience around investing in different neobanks and how they went for structuring. I think when you start a new startup or anything new which you want it to be disruptive or a different altogether new experience for the customer segment, you want to be less regulated about it, and because it gives you more agility and flexibility. So from a day one standpoint, do you want to be manufacturer of products or do you want to be sort of co-creating the products? I think that is a call one has to take as an entrepreneur. We took this call that let's be a co-creator initially, where we don't want to take the compliance hassle right from day one with the regulators. But over a period, when the customers generate trust in our brand or when the customers generate trust in our ability to offer the more relevant products to them, this is where we sort of move to an area where it's about how do we also play a larger role in offering the products to the consumers. I think that's the approach which I feel is more suited to the stage of the company as vis-a-vis and I think this is also a function of the capital, if you ask me. To we manufacture the product and then waiting for the license for a couple of or 2-3 years, and without proving that whether all your efforts of 2-3 years will prove out to be success. Nobody knows how the consumers are going to adopt it or how the customer segments are going to see it different or relevant to them. So investing early on, running after the license, and then figuring out the business model later, I think that might be more suicidal for investors as well as for entrepreneurs. So while that has a merit, the license always has a value in itself. But I think in my view, the approach of generating trust by offering the products, by having the flexibility to offer the product, is a better approach. Whosoever starts in this segment.
Nice. I have follow through on you, but I'll first invite Smita because she has seen some investments and taken some calls as well. Smita, what would be your experience on this decision?
Yeah, to just add to what Jiten said, so I completely agree with this point in terms of the stage of the company and what is relevant at what stage. I think the other point really is the macro environment in the country and the jurisdiction that you're operating in. Frankly speaking, whether or not you want to be a license holder is really not in your hands, because in most jurisdictions, granting of the license happens in a time-bound manner at certain time windows. So it's more a question of whether you are present at that time window or not. So I think that is something that you don't determine. It's the regulator that determines. And then you kind of match your plan according to that. The second thing is, so for example, even in the Singapore case, obviously there were many more applicants who had applied for the license and only 2 have got it. That doesn't mean that everybody else will abandon their financial services plans that they had thought. They are, I'm sure, going to work with an alternative model which will allow them to have the front-end customer ownership, allow them to offer a seamless experience, and potentially stitch up a range of partnerships that can mimic that similar seamless experience without the hassle of the compliance and the regulatory burden that a license holder needs to go through. So there's no clear answer of what is right and what is wrong. It's a function of which country you are in, what stage you are in, and where do you want to maximize your efforts.
Understood. Given the follow-through which I had was, as Smita also highlighted earlier, and one of the premise of this conversation is in the Asian or the emerging markets, a lot of neo-banking problem to solve is to focus on the unbanked. Now, obviously, the unbanked are a profile which the traditional incumbents haven't explored as much. So, to your co-creation model, is it very smooth and easy because the manufacturers you're talking to haven't really devised a process for that segment? Or what are the challenges, nuances there, or what's the best?
Never been an easy problem to solve, and I think that's why I feel there is an opportunity. Considering that challenge is very, very difficult to navigate for many, and people sort of give up. So if a 20-year-old kid want to navigate a bank process, I'm telling you that's like next to impossible. So to navigate the process, you've got to be knowing the system. So I think that is the hard truth today. But on our side, yes, we have gone through our own learning curves in terms of what makes sense and what doesn't. Like I'll give you a real situation. So we started with a idea thing in terms of this is what we will do on day, and this is how the customer offering would be. So we also had to go through many resets in our expectation.
Did we lose Jitender?
Yeah, I can't hear him anymore. I do see his picture frozen. I don't know how much time we have, Vivek, so you should just do a time check and then...
I thought we started on 11:40. We have another 10-15 minutes to chat through. Jitender, are you back? Let's give a couple of minutes, Smita. Why don't we chat and close out on that point? And the kind of, probably I just want to overlay, let me just add on to a little bit and throw a question back at you. As I was sharing in our earlier chat, what we have realized is in a lot of my work involves helping, and me and my team, we worked a lot with incumbents in banks and financial institutions in building digital infrastructures for them. And we could see that the understanding of what is needed in an API infrastructure, which is what Jitender is referring to, and when partners like neobanks come to incumbents, they're really expecting touchless, intuitive, intelligent connectors which are suited to the use cases that they're working on. Whereas a traditional approach has been whatever has been available in a core banking kind of expose it out. So it's been a bit of a journey that we have seen, and both in the region, I've been talking to Stancy recently. If I look at the ICICIs or the Yes Banks of the world in India or Federal with whom Jupiter is partnered, we have seen a couple of banks now completely revamping their API playbook. So what it really means is, as we see the industry evolving, we also see a fair bit of incumbents evolving. It's a larger ship, so it takes a little bit of time for it to move. But in next 1 or 2 years, I would prophesize that most of the large incumbents would undertake API projects, not as point projects, but almost the way they looked at core banking transformation, because now they have to serve the entire diversity of distributors who are emerging around them with their own unique variety of use cases. So hopefully that should, and that kind of leads to the second point we were discussing, as some of the neobanks themselves become licensed. That would be an interesting battle. And then the differentiation between who is an incumbent, who is a fintech, that line might get very blurred. What's your view on that?
Yeah. So you're right. Actually, actually, I
Sorry,
don't
wait.
think.
Yeah.
Jiten, we were just
Great to have
chatting,
you
waiting for
back,
you to come
Jitendra.
back.
Yeah.
Yeah,
Sure, sure.
Smita was
Yeah.
responding to a query. We'll come back to you after that. Yeah.
Sure.
So as I was saying, I think while there is this new age entrepreneurs who are trying out these completely customer first, digital only, mobile centric business models, while all of that is happening, clearly the incumbents are not resting. They are adapting, they are changing as well. And when I say they are adapting and they are changing, it doesn't necessarily mean that they also have to completely become a front end centric consumer bank, shed everything else that they are doing and transform into that. That perhaps may not be the best option for them because that's not where their core strengths lie. And so we have seen examples, as you rightly said, of banks who are transforming, but transforming to become better partners to fintechs rather than transforming to replace the fintechs or compete with the fintechs. I think there is room for multiple players in the ecosystem, but all of them have to understand the new reality, have to understand what the consumers want, and adapt to those realities, and more importantly, leverage their core strengths rather than try to be something that they can never be. In fact, the whole reason why the fintechs and the neobanks have emerged is because the large universal banks, while they bring a lot of stability and security and trust and safety, they do not bring the agility and the nimbleness and the customer centricity. So I think there's room for both, but you have to still adapt and change.
Fair point. And I just want to build on the earlier point that you had made on embedded finance. And if you're looking at the Singapore model as well, then a fair bit of neobanks would be driven by their ability to generate authentic data and not really to create authentic products, right? So that will come follow through after that. So probably every neobank, and especially if it has a way to generate that authentic data by providing a certain service, by kind of working with their customers, then that is a unique problem they solve, which the incumbents, because of nature of the business they have, they can't. They can't really become an e-commerce company overnight. But an e-commerce company can create a new banking offshoot, right? If you may. Jiten, does that make sense? Is that the way you also think about it?
Yeah, so definitely, if you have like tons of customers with you and you want to sort of create a financial services franchise, it is a relatively easier play. But I think being a biased party, considering we don't have any of those, I would say that it's also the customer perception on the platform, right? So whether the customer has a perception to provide his banking or financial services information on the platform as they would be comfortable with pure banking or financial services platform, because it's a trust franchise, and there is a reason why all banks exist today, and there is a reason why banks and churches have been compared. So I think that is the so I would say that while that is a case and which has been sort of still getting proven, uh, but the independent guys have like more ability to create more compliance-led model, more trust-led model, and I think that is where the customers are like, yes, maybe my data is not being compromised, my data is sort of fully secured and not being used for alternate purposes. So I think that will be there, but it has to be seen. But I see the use case of clearly the where the customer is present in consuming other services, uh, high likelihood of they at least trying out the product, and if they find it pretty contextual, they would adopt it.
Right. On a lighter note, I couldn't help but think that for both a bank and a church, you need to have faith that things will work out. So the faith is that is a common. It's actually a good pivot for the last round. We would have probably another 10 minutes of chat and time provided to us. It's really focusing because it's nice that you really touched upon trust, because the last segment I want to talk about what are the challenges from a neobanking perspective. And probably, Smita, your view, trust is one angle we really want to debate a little bit on, because it takes years to build that. How can you build it? Has someone been successful in building it? Is there a lesson from doing it? And secondly, beyond trust, any other challenges that both of you feel that this nascent industry would have to grapple with as it tries to find its firm footing? Smita, your response. Jitender, then I'll come to you.
Sure.
Absolutely, you're right. Actually, before competing on price, I think the new banks would need to compete on trust. That is the first port or the pillar that needs to be built. And trust can actually manifest in multiple different ways. In the Indian context, used to the idea of government-owned banks, and that was the source of trust, that the bank, whatever happens, my money will be safe, and I will always keep my money with a government-owned scheduled commercial bank. In today's parlance, actually, trust also manifests from transparency. Trust manifests from, are you there to do hand-holding, especially for first-time customers? Are you communicating in the language and in the context that they understand? So there are multiple ways of building that trust, and that, I think, is paramount to kind of building your business. The other route, many of the neobanks have taken is, in order to build that trust, it's hard to start with a deposit or a saving product if you're a new brand and a new company and a new entrant in the market. And so a good way to break that barrier is to actually start with credit products first, because the need for credit is high and there is less that people care about in terms of who they are borrowing from versus who they are giving their money or placing their money with. And that then becomes, as you start offering, small ticket credit, which was otherwise not available and not accessible to a large segment of population, that then becomes a source of trust, that these people are here to help me and solve my problem and make my life better. So I think trust is absolutely the first pillar that needs to be strengthened, even before you think of price competition or product competition and other things.
I couldn't help but think, and I get very diverse views even when I work with my clients and what I hear on the angle of credit. I have almost likened it to a sugar of a financial services diet. You need it, but is it the one which would build? It's also not easy. The credit relationship, if things work out, it is fantastic. But as a first relationship, it can be tricky as well. Jiten, what are your views on building trust and especially, let's say, the first suite of products which could get designed? And of course, there are different business models, there are different calls.
Right.
But what's your view on trust and other challenges that neobanks will have to go through?
So Vivek, I think trust is the largest challenge which any neobank entity has to surpass with the consumers or with the customers. And I think that is the effort which one needs to make in. And as Smita rightly pointed out, while in the old world, the trust used to be very used to see the physical offices, physical buildings for years and ages. But in the new world where the customer is primarily interacting with you digitally, the trust will get formed with the communication, transparency, and most important, customer service. So, how do you provide the resolution to the customers when they are in trouble? I think those are the moments trust gets formed. And I think there is another very big angle which I noticed in last 5-7 years, where at least the Indian consumers have been behaving very differently. So we saw one very large wallet company sort of getting into payments bank license, and they started offering deposit services and all. And I think and the success still, I would not call it that they got any success, because the balances are not even like $150-200 million over last 4 years, vis-a-vis branch of any large private bank will have those kind of balances. So that clearly shows that how a customer perceives your positioning. I think that is also a very, very important thing, the brand positioning part. So if your brand positioning is built around discounts or cashbacks or the whole thing around just like a short-term gratification, I think that's when the customers also sort of feel that is my money safe with an entity like this? Can I build large balances with entity like this? And I think that is one of the at least one of the real insight which I'm seeing when we interview customers, when we survey customers that like why do you keep money with X bank and why do you keep money with Y bank? And I think that comes out like, oh, my bank does not give me heavy cashbacks or discount incentives because they care for my money. So they expect bank also to be prudent in their financial behavior. And I think so. So customers are smart nowadays. They notice everything, what you're doing in advertising, what you are sort of promising, how you're fulfilling. And I think it's sort of combination of many things through which the trust gets formed vis-a-vis the old age, the old or traditional way of building trust by just having buildings. So I think the digital is very, very different.
So true. And especially if you diversify into products such as investments and insurance, you have to have a 1 to 2 year window. And your customers need to believe that you will be there 2 years, 3 years later when that person needs support in claims and other things, right? So it's as you really get deeper into product portfolio. The other thought which just came to me, and I'm not sure if you have come across these examples when we speak about trust, is in last 10 years, new digital brands have come up which are now eliciting trust of customers, and Forbes is running a list. Some of the large brands we would know. Is there a way, because your point is very valid, because most of the digital players will not have as much physical presence. They will do their ads and things like that. But marrying the embedded finance idea we were speaking earlier, will you improve your trust being a strategic partner to a Grab, to an Amazon, so on and so forth? Is that does that help? Or is that a process?
No, so definitely, Vivek, that helps in terms of when a customer is seeing a brand for a few years and using the services of that brand, and then you sort of offer them additional thing, definitely it is a positive part. But as I said earlier, also I think it sort of also matters is how you position the product and how you fulfill the promises of that positioning. If you sort of don't do the justice on that, the customers will less likely to get trust and despite you might doing everything right, the perception of the customers will be overpowering the whatever you do.
Understood. Smita, you want to weigh in on that? You had some thoughts on this?
Yeah, actually, traditionally, we've actually seen that the banking relationship is actually a very sticky relationship and very hard to move out of. In fact, I was reading some data. In case of Monzo, only 20% of their clients use it as their primary account. Everybody else is actually using it as an additional account to take advantage of the additional products and features that their primary bank may not be offering. So it is therefore a combination. So for a new entrant to actually make a headway and to wean customers away from something that they may be using and trusting, even though they may be unhappy, I think it is going to be a challenge thing. It's not a small, easy task, and therefore one has to continuously do a range of things of offering products and services which are unique at the same time, being transparent, communicating, all of those things that Jiten actually mentioned.
We are probably the last leg. I just have two queries to kind of wind up this interesting chat. Just to close out on risks and challenges, any asks that you have seen or any trends you have seen from a regulatory perspective? Jiten, in your experience as you're setting it up in India, and Smita, as you have seen globally, are there some bottlenecks which are yet being worked on We have seen things like supervision, which has been asked for. We have seen things such as client onboarding requirements, specific rules around credit scoring. So there are a few of those things which have come in place, but every country still doesn't have a pure play digital banking license, so to speak. But have you seen any trend there where is something a bottleneck? Can something be solved?
Yeah, so Vivek, in fact, this is the most gray area in India. So there is no guideline, there is no regulation. Now, what that means is you have to sort of walk in the existing framework, which is meant for something else, which is sort of the guidelines are meant for, let's say, a business correspondent guidelines meant to increase the reach of the bank in the rural segment or in the non-underserved segment. Now you sort of leverage those kind of guidelines to create or access to customer onboarding kind of channels. So it is very, very gray area. And I think the biggest risk itself is the regulation in this business model, at least in market like India, in my view. And you always run at the back of your mind the risk is what are the regulators one finder says this is not allowed or we did not envisage this in this manner, so we will issue guidelines, and those guidelines are sort of too prohibitive to do anything of this sort, or sort of too overbearing. So I think it's the regulatory risk is the biggest risk in this business model as we speak today.
Smita?
Yeah, just very quickly, I'll give you the counter view to it, that I agree that there is a regulatory risk. But if you look at it from the regulator's standpoint, I can imagine why they would be really worried, because they don't know what they are, what to expect. First of all, the technology is moving so rapidly, and what all can be done using the technology is very hard to anticipate unless you actually see it play out. And we obviously, from a regulator standpoint, they have to worry about stability, inclusion, consumer protection, and to keep to have all of those objectives met in a very uncertain environment of, we don't know what this business model is and what all you can do or not do, or how what you do may actually marginalize a consumer or adversely affect somebody, is something that will only play out. So there is a balance that they need to strike. They can come out with regulation very early on, but then you can have it to be very stringent and probably not appropriate. Or you can leave this ambiguity of, we don't know and we'll see, and why don't you do what you're doing, and then we'll express our opinion about what is allowed and what is not allowed. So it's a hard place to be in. And I think it's what I do see is the regulators shifting towards being more approachable, towards being more they are listening more and tracking more on what's happening, but I don't think there's an easy answer either way.
Right, and Mass Singapore has done a fairly good job. RBI has released a sandbox, and few of the geographies have done it. If you ask a partner applying for it, they would wish it is faster. But I think we are on that journey where things are now at least available for people to play around with. But you're very right.
Absolutely.
I think every geography, there is a little bit of subjectivity when it comes to playing around with things like this. But without further ado, let me ask a final query, and we can call back Amit, who is patiently waiting by the side. The last query is really the banks as the term we understand today. Will it still exist in a decade, or will it be very different? One-liner from both of you, either of you. Jitender, you first. Smita, you next, last.
So I personally feel it would continue to exist. As I said, the bank word, the alternate meaning is trust. So it would to exist, but of course the form and manner would be very different. It would be more like a consumer internet kind of a company where the consumer expect bank to be more contextual in terms of their interaction. The services would be more on the recommendation, which is more relevant to the consumer. So, and all those features which we see in the consumer internet world today, which is like the search, intelligent search, the instant customer resolution, or the benefit of doubt to the customers, or the recommendation which is more in line with where you are in your life cycle, aggregating your finances together. So I think all of those would be there's a more intelligent rather than just bank account as a siloed account.
Brilliant. Smita,
yeah, let me just so I think the banks and the providers who adapt and who change will exist. Those who remain rigid and may find it very hard to survive.
Very, very Darwinian, I must say. Lovely chatting with both of